Hello everyone, it's me Pimor Farouk. Welcome to Law of Money. This is our sixth episode of investing and trading. Today we are going to learn about beginner's guide to investing. So let's start. What are stocks? Today we are talking about how to make your money work harder than you do on a Monday morning. First up, what are stocks? Think of a stock like a slice of pizza. If the company is the whole pizza, buying a stock means you own a pepperoni or two. You are a shareholder, which sounds fancy enough to express your parents. You earn money in two ways. Price growth. You buy it for $10 and it goes to $20. Pure magic. Dividends. This is the company saying thanks for hanging out with us. Here is a little bit of our lunch money. It basically a thank you note in the form of cash. Why does company issue stocks? Now, why does a company wants you as a roommate? Because they need cash. They issue shares to grow the business, more offices, more coffee machines, launch products like a rocket ship or a better version of a toaster, reduce debt because even giant corporation gets stressed about their credit card bills. Pro tips: if a company is issuing shares only to pay off the debt, has no growth plan, that's not a business, that's a cry for help. Watch out for those types of investments. Short term, through 1 year. This is a high speed trading. It is stressful, fast, and requires you to stare at a screen until your eyes itch. Long term, 1 plus years. This is where compounding lives. Compounding is the eighth wonder of the world. It is like a snowball rolling down a hill. It starts small and ends up taking whole village of debts. Short term investments. Short term is for people who like adrenaline. You are looking for quick profits from price movements. Warnings: higher risks here. If you don't know what you are doing, short term can quickly turn into no money terms. Long term investments. Long term investing is about patience. We are talking about 5, 10, 15 years. The goal is wealth creation. You aren't just trying to pay for dinner, you are trying to pay for entire retirement villa. The secret sauce: reinvest your earnings. When your stocks pays a dividend, don't buy a fancy sneakers with it. Buy more stocks. That's how you get the beautiful upward green arrow you see on the slide. Ways to analyze stocks. You can't just pick a stock because you like the CEO's haircut. You need two types of analysis. Fundamental, looking at the company's health, it is actually making money. Technical, looking at the charts, does this squeakingly line look like it wants to go up or down? Fundamental analysis. This is the investigation phase. You look at revenue. Are people actually buying their stuff? Management quality. Do the people running the business know what they are doing, or are they just their raccoons in trench coats? Balance sheet. Does the company have more cash than debt? Technical analysis. This is for the chart nerds. You use indicators like RSI. Are people overbuying this? And MACD. It helps your time your entry. You don't want to buy a stock right when it's falling off a cliff. That's called catching a falling knife and it hurts. Key stock market terms. Finally, let's learn the lingo so you can sound smart at parties. IPO, the first time a company goes public. It is like redundant board for corporation. Market cap, the total value of the company. Bull market, everything is going up. Bulls charge forward, optimism everywhere. Bear market, everything is going down. Bears hibernate and ruins the party. Fun fact, the term comes from how the animals attack. A bull throws its horn up into the air, while a bear swipes its paws down. This is the end of this video. We had talked about beginner's guide to investing part 1. Stay tuned for next video on Saturday 6:30 p.m. Bye.